Good morning. Now we'll go on to the first problem in AS12. Z Limited purchased a fixed asset for 50 lakhs, which has the estimated useful life of 5 years with the salvage value of 5 lakhs. On purchase of the assets, government granted it with the grant of 10 lakhs. Pass the necessary journal entry in the books of the company for the first 2 years if the grant amount is deducted from the value of the fixed asset. So in this problem, right, what is the accounting treatment? Whenever you receive the grant, it is shown as a deduction from the value of the fixed asset, right? So what is the value of fixed asset? It is 50 lakhs. So let's start passing the entries for the first 2 years. So what is the first entry? We'll pass entry for the purchase of the fixed asset, which is fixed asset to bank. That is the first entry. Journal entry in the books of Z. What is the first entry? Fixed assets account debit to bank, which is 50 lakhs. Okay. Now, when you receive the grant, you show it as a deduction from the fixed asset, which means we need to reduce it from the fixed assets account. How can you reduce it? By crediting the fixed assets account. Bank account debit to fixed assets, 10 lakhs. Okay. Now, what is the depreciation charge for the fixed asset? It is based on the straight line method of depreciation. Now, the net cost is rightly 40 lakhs now, subject to grant. And from 40 lakhs, if I reduce the residual value of the asset, which is 5 lakhs, right? 40 minus 5 is 35 lakhs. And 35 lakhs by, what is the useful life? 5 years, right? What is the useful life? It's 5 years. So 7 lakhs becomes the depreciation charge. So how is it? It is 50 lakhs. That is the cost of the asset, right? 50 lakhs is the cost of the asset. This is 50 lakhs. From this, if I subtract the value of the grant, which is 10 lakhs, which means I'll be left with 40 lakhs. From this, if I subtract the residual value of how much? 5 lakhs, I will get 35 lakhs. What is the useful life? It's 5 years. Therefore, the depreciation charge is going to be 7 lakhs. Make sense? So we pass the entry, depreciation to fixed asset is 7 lakhs, and then we will transfer the depreciation to the P&L account. P&L account debit depreciation is 7 lakhs. This is the entry for the year 1. For year 2, same, pass the entry for depreciation, again 7 lakhs, and then transfer it to the P&L account. So depreciation to fixed asset is 7 lakh, and then P&L to depreciation is 7 lakhs. That's the end of the problem.